Good afternoon, everybody. Hello, hello, hello. I am an associate member of T3 Trading Group, which is an SEC registered broker dealer and member of FINRA SIPC. All of my trades are placed through T3 Trading Group. You should carefully consider whether trading is suitable for you in light of your own financial condition. I, I got out of QVCGA that I was long. I got a Penn Entertainment today, which I was long. Um, Everything else should be more or less the same. I'm not in Joby. I've been out of that for a little bit. How's it still in there? I'm not in this. Boom. Everything else should be more or less the same. All right. Wow. So spies are up 0.35%. The Qs are up 0.6%. The IWM is only up 0.16%. The TLT is up this today, and the dollar finished down. So, uh, Brant said best into the close in the chat. If you told me yesterday at 4:30 when Nvidia was trading at like 175 and CrowdStrike was getting smoked, that the Qs would be the leading index by the end of the day today, and Nvidia would still close red, but the Qs would be up 0.6%, I would say improbable. I would say impossible, except this market has kind of done this time and time again at this point, right? It's part of that dispersion theme that we keep talking about. And that was the one thing I really made note of in the morning meeting today was while the NVIDIA report might not be good enough to get NVIDIA to break out and really continue or even be green on the day, the NVIDIA report was good enough for the market to continue to hold up. There was a chance that if the NVIDIA report was bad enough, and by bad enough, I mean like a slight miss of expectations, that it could have really destroyed the entirety of the S&P's bullish technical setup. That's just how important NVIDIA is. Not only is it the largest company by market cap in the S&P, so it's got the biggest weighting in the S&P, the biggest weighting in the Nasdaq, but it also impacts all these other companies. That if NVIDIA had a mini disaster yesterday, it could really destroy the entire S&P. Instead, at the end of the day here, the S&P is at all-time highs, and the Nasdaq has returned to bullishness on its daily chart technicals from being neutral for a whole bunch of trading sessions recently. And again, that's even still with Nvidia being in the red. So that is impressive. This market continues to remain incredibly impressive. The dispersion trade is just full on. It's just full on. If they sell something down, they by definition have to buy something else up. And that's just where we're at. Can that change as we go into September when we get the seasonal weakness? I think it's possible. Um, Pat, who couldn't unfortunately get on the radio into the close today, but he made a comment in the chat, which I kind of giggled at because I get what he's saying. I get what he's saying, and I don't disagree, but I also disagree. Which is, I'm trying to find his exact words uh, in the VTF. He goes, hard to see this market doing this for another month. He goes, then again, I guess it's not hard to imagine. Because I've been saying that for a month. Really, my expectations, if we want to circle back, this is the second to last day of August. My expectations for August was not to have a big pullback on the market. My expectations for the month of August was for us to be choppy. And I do think that we did spend most of August kind of in a choppier environment. Not as strong as we were necessarily in May, June, or July, though these last few trading sessions, we've turned it back up and we're set to close August pretty much at all-time highs. I mean, today, again, marks another new all-time high for the market. The only interesting part about this new all-time high is I still think that the under the surface has changed. It's more the RSP and the IWM that's been pushing this market higher and less the QQQ. Though, again, when you look at this QQQ daily chart, what are the levels I've been saying to watch for a week now? Uh, 576.50 on the upside, the high of August 19th, and let's call it 559 on the downside, the low of August 20th. The Qs, unlike the SPYs, unlike the IWM, while they were stuck between those two levels, I consider the Qs to no longer actually be bullish. I consider them to be what I call neutral. And this circles back to that thing I love to do about, hey, let's just have a look at the indexes, the S&P, the Nasdaq, the Russell. Let's think about them in terms of these very simple terms. Is it bullish? Is it bearish? Is it neither? Or in other words, neutral. That gives you, I think, just a great general understanding and general focus of how you should be pursuing this market. Long versus short versus long short. And then obviously that's just a starting point, right? Because there are other factors to consider, like extension. Just because a market's bullish does not necessarily mean that you should buy it. If there's a ton of upside extension there, it's technically a bullish market, but you have a terrible risk reward to buy, and it might even be a better short at a certain point because of the upside extension. We also really want to have a focus on those market dynamics, right? The market dynamics back in February is what enabled me to have one of the better calls I've had. The SPY, you can see it better in the SPY on this day here. February 19th broke out to new all-time highs after a multi-month consolidation. It looked like it was really ready to go. And I was making big bear calls at that point because of the market dynamics, right? So these are factors that you always want to consider. But a great starting point is just, hey, let's look at the chart. Is it bullish, bearish, neutral? That tells you which direction you're better off focusing on. It tells you which direction you're generally going to have an easier time making money on. And then we can dissect the extension. We can dissect the market dynamics to see what we can gain from that from an information perspective and from a risk reward and probability of success perspective in terms of the new trades that we're putting on. And from a market dynamic perspective, we know that August has been neutral in terms of the systematics, right? They don't really have that much to buy. They do have a little bit left that they can buy, but not really that much. And if you have realized vol at 0, they will still continue to buy a bit, and they probably have been. The big market dynamic for the month of August is corporate buybacks. We read that one Goldman Sachs note that said that the corporations themselves were going to be buying $5 to $10 billion or something like that worth of stock per day, and that's actually the biggest dynamic for the month of August. So that helps to create an underlying bid to the market. So, we're at all-time highs. I can't look at the S&P, the Nasdaq, or the Russell and find any fault in them at all, except no, not even with this IWM now. I actually wish the IWM maintained the relative strength that it had pre-market. It didn't. That was one of the most interesting things about today's trading session was when I first woke up and logged in, I was surprised to see the S&P as high as it was. And then quickly I saw, okay, Nvidia is down, but the IWM is up huge. And I was like, okay, that makes sense. It's the dispersion trade. They're selling down Nvidia, they're buying up KRE again. They're buying up everything else again. That's holding up the S&P. The really shocking thing to me intraday was actually that dynamic reversed. That they sold down the IWM and bought up the Qs, and at the end of the day, with a Nvidia closing on negative turf on the day, that the Nasdaq is the leading index and is green. I would have almost rather have seen the opposite happen, just because from a trading perspective, the IWM continuing would have started to really extend this thing soon. Instead, it's like a little bit of a more risk doji day where it closed green, but without the bigger continuation that would start to make more of a parabolic chart into the big 240 level that I would prefer to see. So, I can't, for the most part, outside of a moderate amount of extension of the IWM, look at the chart of the SPY, the QQQ, or the Russell and find anything to draw from these charts except for absolute and utter bullishness. I can point to some other things that are a little bit less bullish, and that's primarily seasonality here. We are again second to last day of August. September tends to be the weakest month of the year. And as we get into September, you're going to lose a lot of, but not all, of the corporate buyback bid. You'll lose a good percentage of it that I was just discussing was the main buy flow for this month of August. And the systematic funds become, I think, increasingly open to downside risk and less bullish. But you still need something to trigger it. So I don't know what that's going to be. There's a lot of events. Pat, in the beginning of the day in the VTF, was giving us a calendar of the most important events for the first half of September, basically through the Fed meeting. So we're going to have the non-farm payrolls number for August in early September. We're going to have September CPI all before the Fed. So there are still some potential catalysts that could be the trigger, but you need something to trigger it. There was a chance that Nvidia could have been it because of the importance of that stock, but it wasn't it. Again, you can't find any fault really with that earnings report from Nvidia yesterday. It's a darn good report. And anything that it was lacking in terms of just not beating expectations enough, it made up for that with a combination of a $60 billion buyback announcement and just the chatter on the China chip stuff that really came out this morning pre-market. Even though I thought that was regurgitated news, it was enough to get Nvidia back through 179.50, 180. And Nvidia, might as well look at the chart here for a second. Nvidia was wild today. These first two bars are mind-blowing on how this thing traded. You don't see that every day, even on earnings report. Earnings, that's when you see the crazy stuff. But this upside tail, I would almost think it's fake. Like if I wasn't trading it, if I didn't have executions up there, I'll bring over my execution chart for a quick second. If I didn't have executions up there, you can't even see them. I would almost think that this tail was fake, but it's not fake. It's real. So Nvidia, which got bought back through the 179.50 to 180 level in the pre-market on the headline of Trump is speaking to Jensen Huang or vice versa on the potential of opening up the Blackwell chips, but potentially a reduced version to China, even though that's old news, got us through that level. And then right at the open, that there was a momentum rip in this thing like you would not believe unless you were actually watching it, that then 100% faded. The 5-minute candle pretty much closed exactly where it opened. And that led to selling, that led to a downside tail. So now I got a massive upside tail followed by a pretty darn big downside tail that brought you just right back to the gap fill and the equilibrium area. So when I started to see it fade back down from 180, 150, I called out a short. This turned out to be my best trade of the day by far. I called out a short versus the 180, 150, 180, 155 high. And I described it as good chance of getting stopped out, just with how whippy this was in the first 10 minutes. But if you don't, and if it fades back through 180 on, they're really, really good risk reward. So the risk on it was super tight. I whacked the bid at like, I think 181.20 something. Hit the bid at 181.20 something. Threw my stop loss up at 185.55. And then caught the entire move and was super greedy on it and really kept 20% of that position all day. Never got the full follow through that I actually wanted to be able to get. And then this thing just became kind of a choppy, sloppy mess for the rest of the day, which honestly was what I was expecting when I was doing the morning meeting to begin with. But when things are moving, they give opportunity, right? So there was a great shorting opportunity. And then even though I didn't take it because I was short and I can't be short and long at the same time, I pulled out the long at the low, and I know Brant jumped in that, Josh jumped in that, a few of you guys jumped in that. So that bounce back trade worked really well. For me personally, I think this is what Brant did. I would have been all out by the 80 MA on the 5 on that. I think that's what Brant did. Actually, no, I don't want to speak for him because then I remember him saying that he kept slightly more than 10% of his position when he was chatting around noon or so. So he must have kept that for a little bit of a further move. And I love that, right? You always keep a small percentage of your position just in case, because you never know once the risk on the trade is fully covered. So that was a couple great trades, great call outs, I think, from Nvidia. I traded Snow twice today. Couple good day trades. One was off the 10-15 high, and then one was really off this like 210 high that Dennis called out. Uh, Caught it, covered tiny bit, stuck with the trade. I actually got filled on the offer. This is cool. I got filled on the offer at 249.99 in Snow. I thought was a pretty darn good fill. You can see it. You can see it right there in my execution dot. And that was also just a couple quicker trades and scalps there with Snow that I was able to make a few dollars on as well. And that's pretty much it. It's just that it was more just a matter of me uh doing the Stewie Griffin on the meme I posted into the close there about, holy cow, are the Qs really breaking resistance given where CrowdStrike and NVIDIA were trading after hours yesterday? And the answer is yes. The Qs are breaking resistance. They're going back into full on bull mode, and this market is unstoppable. But like Pat said, it's hard to imagine the market doing this for a whole nother month. But then again, it's not that hard to imagine it. So perfectly. That comment followed by the slight walk back on the comment with some degree of sarcasm, I think describes this environment perfectly. So, I think, again, just to repeat myself from a big picture, you can't look at the SPY SQs and IWM and see anything but bullishness in there. But I have learned, I used to, for anybody here who's new, I used to really hate on the concept of seasonality in the stock market for a lot of my career, because what I would say, and this is an accurate statement, is yeah, seasonality is whatever. Just because something happens to happen in previous years does not mean that it has to happen again this year. And then lo and behold, I saw so many times over the course of my career those same seasonality truisms hold kind of year after year after year, even though I said just because they happen in the past doesn't mean they have to happen in the future. And honestly, I think that both sides of that are correct. Just because seasonality happens to be a certain way, where again, September happens to typically be the weakest month of the year, it does not mean that this September has to be. But the thing that I learned that really changed my thought process, that made me start to respect seasonality a lot more, is that seasonality is not just taking the last 50 years and putting together an average of what happened over the course of the last 50 years over a given day, week, or month. It is oftentimes based in actual supply and demand dynamics that are forced to happen in given periods of time. And that's actually what creates a lot of the seasonality flows that we deal with and we see on a year to year basis. A lot of years, no year is the exact same from a previous year, but you do see a lot of rhythm and rhyme. And we will see if we get another weak September, because I've seen corrections happen in September very, very often. And now, again, when I'm combining that knowledge just with where some of the market dynamics are, the fact that you lose some of that corporate buyback bid in September, the fact that the vol control funds and the CTA trend followers and the risk parity funds are pretty much fully in the pool, it leads me to believe that it is very possible for us to see weakness in September. The one thing that still scares me about this market, for anyone that wants to be bearish, actually is how bearish long short funds have been. And that's the one like real missing piece of the puzzle. If you remember back in February, one of many factors that led to me getting bearish right before we broke down, led to me getting bearish when we were at all-time highs, wasn't just that the systematic funds were in a similar situation to where they are now. In the 95th percentile of long exposure, everybody's in the pool. There's not much buying that's left to be able to be done. It was that the long short funds were long at their 97th percentile on whatever look back as well. You definitely don't have that right now. As a matter of fact, just one piece of data after the next shows that the long short funds are very underinvested. They still have a lot of short exposure, particularly that short exposure is on the IWM side, though, which is interesting. So we'll see. I think that there is a chance of us seeing a real corrective period at some point in September with everything I'm just describing with the seasonality and everything. I also think, though, that there's a possibility that it's actually another just choppier month in September that's marked by some of what we've seen in August, which is just maximum pain for the long short funds. Because, and that's almost why the market will struggle to go down, is because they don't have as much long exposure as they did back in February. They have a lot of short exposure, but the long exposure that they do have is primarily in the AI trade, which was fully loaded, NVIDIA, Microsoft, Palantir, and the short exposure that they have seems to be very, very much concentrated to the Russell. And now you've started to see already in the month of August just this dynamic of the Qs until today, despite what the S&P was doing, just really struggled to get back from neutral territory to bull territory, whereas the SPYs and the IWM are just continuing, and the IWM is just squeezing higher and ripping higher and ripping higher, and causing again max pain. I know I've like half joked in the past about like if you're running a long short fund, you've been long Nvidia and short Jumai to hedge it. JMAI to hedge it, and now look at you. So yeah, that's where we're at. Just an incredible day. I still think we did a fantastic job pulling out a couple big trades. I know I did really well with my intraday trading today. Some of the swing stuff that I have on, I would have liked to have been better, to be honest. So I'm small negative at the end of the day today, primarily because some of my swings were against me. But that's after I had a really big update yesterday. So here's what it is. Um, that's all that I've got for you guys for today. I'm happy to answer any questions. Um, from Michael S. Made some money on Baba over a few weeks, but it's been so inconsistent, gapping wild that I'm not holding to earnings. So that's smart. It's smart. You got to be very careful holding stock in earnings unless you've got a really, really good profit cushion where if the thing is going to gap 15% against you, you can afford for that to happen because your profit cushion is so strong. I'm a big fan of risking money that I've already made in order to make more. I think that's how reward maximization occurs, is that you are greedy when you have your risk covered on things. You're greedy when you're most likely going to make money in a position no matter what. That's when I love the concept of max greed, right? Intelligent max greed. But otherwise, if you don't have that strong profit cushion, especially into an event, you're better off getting out of the way. Bull is up. Of course it is. Of course Bull is up. How is this not the ultimate meme stock? Just because of its name in this day and age of the Wall Street bets. Speaking of which, we got BYON returning their symbol to BBBY tomorrow. That was a big, big meme name that we traded a ton of back in that COVID period. What's a firm doing after hours? Forgot about that one. Firm rippity ripped. Firm up big. Surprised that's not moving SoFi at all. Is it moving Upstart? Yeah, Upstart's up. Uh, shouldn't Dell and Marvell be up huge on the AI trade? Well, Dell just came out with earnings, right? I didn't look at it. Dell's down now. I didn't look at the numbers. Bouquet posted them. I'll let you look at them on your own. Not a huge fan of trading Dell. The Dell was a little crazy. That was back in 2024 now, huh? Interesting. That seems like it was yesterday. Marvell's on earnings after hours today? I definitely should have known that. Trading down. So this concludes it just about. We're waiting for AVGO, which is a week from today. But minus AVGO, I am pretty sure every single semiconductor that reported earnings this quarter traded down. Every single one. ARM, ASML, AMD, Nvidia did close red today. Now Marvell is down. Micron was down on their last report. You could argue they're either first or last of earnings season. That was another one. Micron had a good report. They traded it down on it. Every single semiconductor related stock has been down on earnings this season that I'm aware of. But the Qs are making their way back towards all time highs, and the SPYs are making all time highs. So sell Marvell, buy something else. The Google news with Apple, like some of that antitrust stuff. I don't know if there's a specific date on that on when it's supposed to come out. All right, not seeing too much in the VTF. Let me check out what's going on the YouTube because I'm streaming from Cyril. Looks like the market is unstoppable, grinding higher. What advice you can give to traders trading in this environment? Yeah, so what advice can I give to traders trading in this environment is keep it simple, stupid. The trend is your friend. That would be what I would say to you. You should have in the back of your head some of the stuff I was just discussing earlier about seasonality and market dynamics as we get into September. That there should be a placeholder there somewhere in the back of your brain for that information. But the bottom line is the trend is your friend. The trend is higher. All three of these indexes look super, super bullish. And if the market dynamics and seasonality will come into effect, you don't have to be the hero that shorted the high to the penny. You can short things on the way down when we lose some support levels. Um, the SPY has basically lost one support level that I can think of, and it was a very minor one time since the April low came in. And that was pretty recently, right? That was this break of 630 here on August 1st. Maybe another little one on the break of 640 here on August 19th. But the trend is your friend. If the shorts come, the short setup will come with it. All right, guys. Anything else for today? Anybody have anything else? I need to catch up on some sleep. But I'm not going to bed right now, so I'm happy to answer any questions anybody has. So I always read that you can't actually catch up on sleep. It's like not a thing. Uh But then I read something within the last day or so that said, and I think that's more from a brain aspect. You don't catch up on sleep. You just go back to, sleeping your 8 hours and then you get back to normal. Um, but then I read something that actually the concept of catching up on sleep, if you were to sleep more, after a period of time of not getting enough sleep, that it lowers heart attack risk. So who knows? Uh, Reddit had a really strong day today. Reddit looks great. It looks great negating yesterday's candle. I like it. I think you could be long Reddit versus 220. I'll believe it, Rich. All right. Well, if nobody else has anything, I'll wrap it up there. It's a short meeting. The indexes are still, I don't know. I don't want to call the indexes boring right now because they weren't boring today. They were shocking. But this week has been a little bit of a slower week, and it's the end of August, so people are doing stuff. I know it's been a busy week for me. All right. Brant, you can call up Josh Leffler for that one. Thanks, Scotty. Thanks, everybody. Have a good night, guys. See you all tomorrow.